So hello again. It's a pleasure to introduce the governor of the Bank of Spain, José Luis Escrivá. He has a distinguished career in central banking, but the most important thing is he spent 10 years in the private sector. So that is something which I think is super important. He understands what it is to be on the other side, and we value that very much. So Governor, as you know, the title of our session is, or our day today is the urgency of growth. I said this morning that the most important challenge we face today is lack of growth could be a problem for our financial stability. So this is important. We face many challenges, of course, geopolitics and fragmentation and so on. But I'd like to start by asking you that in this context that you know well, what do you see as the main factors that will drive growth? What role can we expect for AI? Can it help us to accelerate growth? And in general, what risks, but also what opportunities you see?
No, it's not an easy question, I would say, as a start, but I think it's worth noting that over the last 2-3 decades, the major engine for growth has been the globalization of trade, the integration of global supply chains, and even strong migration flows. I mean, these are been factors that have been very, very important globally. It's obvious that this engine is becoming exhausted, but it's also true that a key driver looking forward for growth rests with a new technology, AI, and related technologies, and the potential is very strong. So it can take over, it's taking over, but I think that in order for AI to be really a general purpose revolution from which we can really gain in terms of efficiency and productivity as much as we have done in the past in history from other technological revolutions, two conditions should be met, and we should work on them. And this is still, to me, not fully clear. One is the adoption and the absorption of AI across the entire economies and across countries, in particular, reaching small and medium enterprises, reaching some sectors. This requires to focus, the technologies are there, but the adoption and the diffusion of these technologies in a broad manner is key. The second factor that to me is going to be important is learning from the mistakes in a way that we, particularly in the last period of globalization, that we haven't sufficiently factored in transitional cost. And we need to be, there should be a sense of awareness about the impact of some processes like globalization on certain workers, on certain sectors. Try to really work on reskilling, upskilling of all those who might be badly impacted by these processes. And I think if we do so, I would do so from the very beginning, I mean, the process would be, let's say, more sustainable over time.
So, you know, AI and in general, the tech economy is doing better in the United States. And, you know, we're seeing all these tariffs and the world is changing, as you all said, and the engine of growth is going to be different. So in that sense, if you think about where Europe is, we have seen great diagnosis, so we know what works, we have a, you know, we know what the issues are, and the conclusion is always Europe needs to be more competitive. Again, going back to AI, it is going to be a big factor. We were discussing just a few minutes ago, you're one of the governors who wrote to the Commission, you launched the simplification, as I was saying before, in the US, simplification is something different. It's deregulation, and those are different things. So if we go back to Europe, you know, how would you define success for Europe in this conversation? So in Europe, we call it simplification. what is success in Europe in terms of what is happening. There is progress, little, but progress in Europe. And as we compare ourselves with what's going on in the United States, and I gave some examples, how do you think we can achieve that competitiveness, which is a moving target, right? Because everybody else is moving. So even if we're moving, unless we move faster, Europe, US competitiveness. And related to that, how can we make progress, not just in those initiatives that you and other governors wrote about, but in the more structural issues we have in Europe, right? One of the huge issues in today's economy is scale. You launch a company in the United States, you're instantly across the country. Here, there's 27 markets, effectively. So banking unions, savings unions, how do we get that scale in services in Europe? So again, one is maybe more tactical. Actually, I think both are very structural issues. Competitiveness vis-a-vis the US, that's moving forward, and the structural issues that we have.
I think removing segmentation. I think if we are able to identify channels whereby we can really exploit the single market much more than we do, we will be successful. I think that it's really time now to try once, at least once, the 28 regime. I mean, there are a number of areas, because commercial laws have not been harmonized at the European level. This impact, for instance, on banking, no doubt, that it's important that the Commission, I mean, the European authorities choose at least one potential example for 28 regime, so that is immediately fully applicable in the entire Union. Might be a product, might be a sector, might be a group of firms that will be under the same homogeneous norms and conditions from the very beginning. And there are examples, potential examples. You just try. We need a pilot. We need a success story in terms of 28 regime, and this is the way forward. The alternatives are not clear-cut to me. I mean, given the density and complexity of the way in which decisions are made at the European level, but the 28 regime is a route that has not been still explored and need to be done. Second, on capital markets, I think the SSM is an example, actually. SSM has problems and complexity, but it's a single supervisory body for significant institutions in Europe. We should do the same for capital markets. And for capital markets, there is a lot of room for integrating, let's say, the supervision, at least for some parts of the system. This is also, to me, a good example of a low-hanging fruit that can be achieved. There are examples, securitization. Probably there is room for clearly ambition, reform, flexibility in this area. I mean, there is room for reducing complexity and red tape on many areas. And I think that it may take time, but the simplification of the normative corp in Europe is a must. I mean, when you see really the production of norms, and in particular, the fact that level 1 regulation and directives are produced in such an ambiguous terms that at the end of the day requires level 2, level 3 guidelines to fill in, creates something which is extremely dense. So I think there is also a great deal of room for simplifying all this.
So I gave an example this morning, 95,000 lines, that's 100 Don Quixotes. Don Quixote, 100 times, that's what the EU financial rules say. And you're totally right, that's not the level 2 and 3. We should calculate that, guys, actually. Because that is then, I don't know how many more.
But that's the problem is that's in our sector, in the financial sector, but this applies to every sector. But when you ask those who are responsible, let's say at the operational level in the sector, will tell you, Europe, I mean, the complexity, the density is huge, but in my sector is badly needed, it's very well justified. That's the reason we need to engage in a very top-down work, because bottom-up, by nature, by human nature, but it will not happen.
But we're discussing that yesterday at dinner, and one of the things that, if you look back, when did Europe make progress? And you mentioned the SSM, which is a huge step forward for Europe, right? At least since I'm around in this business, it's happened twice. Once is after the crisis, and second is in COVID. So we used like fast-track governance in Europe to make decisions that were unthinkable in other situations. And I think your idea, it's been around, of the 28 regime might be the way, because otherwise we need a mega big crisis, and there's no sense of crisis in Europe right now.
No, another opportunity at present is security. Security
yes.
is becoming, is perceived increasingly over time as a public good in Europe that need to be enhanced and preserved. And there might be at least a coalition of the willing, or at least the possibility of moving in reinforcing defense expenditure and have a unique, a genuine European defense system. This might be a driver for
change,
working together more rapidly and also deploying resources that has a spillover over the entire economy.
So just very briefly, when you say coalition of the willing and the 28 regime, do you see Spain, in the case of financial sector, that are being part of that first mover group, or do you think would be on the second?
Well, yeah, indeed, and I think that we have seen this from the initiative of the Minister Cuerpo with this innovation lab. I mean, basically, what they are proposing, and for instance, securitization, we are also working with them, is just let's try a number of things, maybe among a few countries, let's see if it works, and then we can extrapolate it. But let's move. Let's move and do something which is tangible.
So it's great to hear that. Thank you so much. You're one of the most forward-looking governors in Europe. Let's hope that soon it will be in the world and move Europe faster. But so there's a lot of talk now, and clearly that stablecoin, the US has launched the Genius Act. If you compare that to MiCA, it's way ahead. How do you see the stablecoin, which clearly is a new currency, and that's what sometimes people don't understand. This is totally a new currency. Dollar stablecoin is not a dollar, it's a dollar stablecoin. And related to that also, the CBDC, the central bank. So in one case, in the US, it's been driven by the private sector with rules set by the government. In the case of Europe, it's more leaning towards let the state or the central bank issue its own currency. So how do you see those two alternatives, risks and opportunities in both?
I think it's important to make, from the outset, a distinction between the technologies involved in these new innovations and some elements that have to do with how they are regulated and they are extended in the economy. So I think that, fortunately enough, we have a number of new technologies that we need to exploit and to encourage, which is tokenization, smart contracts, distributed layer technologies, blockchain. All these elements are part of these new means of payments, and we need to ensure that they are intensively used because the efficiency gains are substantive. Maybe what we may have not such an agreement or different approaches is how to do it. And I think there is a risk that if that in the way that these new means of payments are regulated, there might be a sort of arbitrage that might be counterproductive across jurisdictions or between banks and non-banks. I mean, we feel more comfortable with banks being those who are really running the show in a way because we supervise the banks. Banks have stricter controls in prudential ones. So I think the European view is that private banks should be really have a very relevant role in leading all these technologies. Maybe in the US, they are more agnostic between banks and not banks, but I think this is a different approach. The second one, I think it might also differ, is that we strongly feel that in the transition to digital money, which is unavoidable and desirable, it's important that the central bank retain a key role. I mean, central banks for decades, I would say for nearly centuries, have been absolutely centered in providing trust to the system, to the payment systems. And we need to do so, continue to do so in the new world. And it's desirable to everyone that we provide this trust. And we provide this trust twofold. On the one hand, issuing currency, and the other hand, maintaining a wholesale settlement system in which we are really involved, providing security and safety. In the new world, I think currency is going to be increasingly substituted by digital money, and I think we need to provide at least an option which is comparable to currency, and we are the issuer. This is one thing. And in wholesale systems, all what we are doing at the Eurosystem with the APIA and Pontex project, basically what they are aiming at is introducing these new efficiencies and technologies in wholesale payments in order to ensure that the settlement and clearing of payments through banks is done in the future with the new technologies and with the same safety. This is, I think, the European approach. Ultimately, what we are basically aiming at, I think, is a financial system which is fully tokenized, where the banks issue tokenized deposits, with governments and debt issuers do it also in a tokenized manner, and all these securities and payments are settled in a wholesale system that incorporates ledger technologies, smart contracts, and all these efficiency gains can be achieved while at the same time maintaining the public support to the payment system. I think it's something that we need to maintain. This is the European approach, and I think this is the right one.
Okay, let me see if I understand. Please correct me if I didn't understand my summary.
Yeah.
So I guess Europe view is that it's okay for banks to be in the tokenization, i.e. tokenized deposits.
We encourage that.
You encourage that. You believe that currency, i.e. stablecoin or whatever, CBDCs, should be issued by the central bank, not by the private sector. And
I will introduce
that's what I heard.
A qualification on that.
But at the same time, you say you do want banks to be part of the new system. So how do you square that circle where the dollar already has said, the Americans have said, we will allow the private sector to issue dollar stablecoin, which is effectively a new currency, and we'll allow the banks to play, where, as we say in Spanish, es muy difícil poner puertas al campo. You basically are going to have a parallel system to what you're describing, where you're going to have not just non-banks, but banks in general being allowed to issue dollar stablecoin. And this is a 24/7 global interoperability, which has a very clear use case for many customers. Whereas in Europe, the third thing I understood, which, by the way, we as a financial sector agree is, and you said that very clearly, it's about the rails. So what is the point of issuing a central bank digital currency on the old rails? You said very clearly on the wholesale side settlement, and we agree, by the way, on the new rails, that makes a huge amount of sense. What would a central bank digital euro for retail purposes add to what I believe is already digital money, which is the instant P2P that we, the banks, are creating in Europe? So two very simple questions. Do you still?
I think Okay.
Is it okay?
It's okay.
You don't need to answer because, just...
Yeah, no, I think I have an answer. I have an answer.
Again, what
When
is...
we exchange, when we make a payment,
Sí.
and we settle a payment between two persons, and we pay with 50 euros banknotes,
Yes.
the reason why everyone accepts this, and it's clear that there is a face value that is 50, is because the central bank is behind.
Yeah.
Is behind. So in the future, when we are moving to a digital world, we feel that the major process of substitution is going to substitute from the use of currency to the use of other means of payments. We feel that we need to maintain the possibility, not competing, there would be other options, as now there are many means of payments. One is currency, but currency has some particular features that other means of payments don't have,
right.
And people deserve that. We need to provide something which is tantamount in the future in digital form of banknotes now. This is basically the idea. At the same time, we need to ensure that when we make a payment with transactions from account to account, this is settled in central bank money in the accounts that Santander or BBVA have in the Bank of Spain. And this provides security and safety. We need to ensure that this security is retained with the new technologies. This is the idea. At the end of the day, and this can even monetary policy implications, that at the end of the day, imagine in a world in which everyone moves to stable coins that are completely stick to certain reserve assets like treasury bills. If there was a crisis, at the end, when there is a crisis, who is provided the ultimate liquidity in money? The central bank. The central bank is the one which is the lender of last resort because it has the possibility of issuing money with no limit. If we move to a completely different world, this flexibility, this elasticity that the banks can provide to a system in crisis management will disappear. So that's the reason we need to retain certain elements that have been very important in the future in providing liquidity. The ultimate liquidity is provided by the central bank. And in the new world, with all these features, we need to ensure that this is maintained by a central bank and that the major channel and the major agent in diffusing this in the economy are the private banks. This is the way I believe.
So let me tell you, I'm 100% on your side, okay? I'm a bank.
We are in the same
We're
boat.
on the same side.
In the same, yeah,
but you and I have a problem. It's called that there's an alternative financial system that is not yours and mine, but it's there. Tether has 180 billion today in US government securities. Tether. You know that. So, and I agree. And so, well, I'm not going to push
I don't see anything preventing European banks to work together to have a stable coins, particularly in the cross-border
including in dollar stable coin?
Including dollars. I mean, you are not, there's no restriction. I mean, now there are no restrictions for that to happen.
Okay. So you agree that European banks with other international banks, there's several consortiums have been announced, one with Santander as a member.
Very supportive.
Okay, great. Please make a note of this.
Very supportive. Because very supportive because
I will remind you of
this is fully compatible with the fact that in some areas central bank money retains some role.
Okay.
And we have to make this compatible.
So, Governor, I have to be strict on the timing. You have 30 seconds to tell this audience, how do you see the future of banks? 30 segundos.
30 segundos.
Like, optimistic or not? Yes or no?
I think that there is a lot of competition, non-bank financial institutions, blah, 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 blah. That's clear. But there are at least, I would say, three elements.
So we have a good future as banks.
Three elements that banks nearly have advantages and should build on them. One is risk management and origination of credit. It's very difficult to substitute banks in that role, and this will remain important in the future. Bank has proved to be very good at adopting technologies, creating platforms, and this may prove very important in the future. Second, second element. And I think that at the end, banks has another advantage, which is, let's say, granular networks, know your customer, very good knowledge about household, firms, SMEs, and this is something, an asset for the future, including the possibility of providing them with services that may stem from AI.
Great. So you agree, as a summary, you believe strong banks are important for a strong Europe.
Absolutely.
Right?
We are with the banks always.
Thank you.
Saluda, Nadia.